Hi everyone, Matt is Connor here, and this week we're going to look at the best energy stock to buy right now. Today is Thursday, April 3rd, 2014, and here on the opening slide we see that the industry of this company is in the independent oil and gas sector. The 12-month upside potential we see for this name is at 31.1%. On to the next slide, and we see that the name of this company is Marathon Oil. Ticker symbol is MRO. Once again, we see the 12-month upside at 31.1%. On to the quick facts slide. Here we have Marathon Oil Corporation operates as an energy company worldwide. The company's North America Exploration and Production segment explores for, produces, and markets liquid hydrocarbons and natural gas in North America. That's oil and natural gas. It explores international exploration and production segment. Its international exploration and production segment explores for, produces, and markets liquid hydrocarbons and natural gas in Angola, Equatorial Guinea, Ethiopia, Gabon, Kenya, the Kurdistan region of Iraq, Libya, Norway, and the United Kingdom. So Marathon Oil is a oil and gas exploration company. You may have heard of them before. They used to be significantly larger. Back in 2011, they actually spun off its refining and marketing and transportation business. So, the company is really effectively now two publicly traded corporations, but the company that we're focusing on here is the oil and gas exploration company. The website for Marathon Oil is marathonoil.com. Marathon Oil is headquartered in Houston, Texas. It was founded in 1887. Definitely been around quite a while. The number of employees is 3,359. The ticker symbol is MRO. Its subsector industry is also regarded as basic materials. Once again, the industry is oil and gas, and the annual revenues for Marathon Oil over the last 12 months was $14.6 billion. So, even though this company is smaller than what it was, it's still pretty sizable. The net income over the last 12 months was $1.6 billion, and cash from operations was $5.8 billion. The market capitalization for Marathon now stands at $24.7 billion. And on to their products and services slide. We don't have too much to show here, but let's see. We've got the Marathon Oil logo. We've got a picture of one of their extraction rigs out in sea of water. We've got some of their workers handling pipes to do some drilling, and below that it says the Premier Independent Exploration and Production Company. There's also a worldwide map here that shows where they have their operations: Canada, United States, United Kingdom, and Norway, the Kurdistan region of Iraq, Libya, Ethiopia, Kenya, Equatorial Guinea, and Gabon. Also on the slide, we included two slides from one of the investor presentations. The slide is basically showing some of their high activity areas, particularly three regions here in North America: the southern Texas area, the Oklahoma region, and also the eastern Montana region, which also borders a bit into Canada. They're showing how, let's see, their 2014 capital expenditure budget is at $5.9 billion, and they see about 2/3 of that going towards North America. So basically, you may have heard how a lot of this gas fracking is really taking off, and how the reserves in North America are increasing a lot, and how we may soon become energy independent. Well, Marathon Oil is benefiting from that trend. This ability to frack, basically extract gas and oil using horizontal drilling techniques, is benefiting the businesses tremendously. On to their key metrics slide. Once again, the annual revenue of the last 12 months was $14.6 billion. The net income was $1.6 billion, and the cash from operations was $5.8 billion. Operating margins for Marathon Oil in 2012 were 59.9%. It's pretty sizable. And for 2013, 58%. So effectively pretty flat. Their valuation metrics, the trailing PE ratio is at 14.3, and the forward PE ratio is at 12.3. So earnings are expected to increase. The PEG ratio is a little rich, standing at 2.8. The price to sales ratio is at 1.7, and the price to book is at 1.3, and the enterprise value to EBITDA ratio is at 3.7, which that seems a bit low. So overall, the valuation metrics, there are some metrics here to say that this company seems to be a little low in some areas and rich in other areas, but for various reasons that we'll get into, we feel like this is really a good buy right now. Yes, excuse me. Yesterday's closing price for Marathon Oil was $35.38. That's against a 52-week low of $29.47 and a 52-week high of $38.18. The 20-day moving average for the company right now is $34.17. The 50-day moving average is $33.57, and the 200-day average is at $35. So the moving average is reflective of the price trend over the past year, and it's a pretty tight range, and basically the price pattern trend has been fairly flat for the past 12 months. The average daily trading volume stands at 5,712,000 shares per day, so it's very liquid stock. The beta for the stock is at 1.7, so the stock tends to move a little bit more when the market goes up, and move a bit down more when the market goes down. The dividend yield is at 2.1%. It's about average, and the average dividend payout ratio the last 3 years has been 23%. Onto the price chart for Marathon Oil. I'm not sure that there is too much to explain here. The stock has been ranging from its low of around $30 about a year ago to its present to a high of about $37.50 or so, $38 to around where it is right now, around $35.50. So the stock's gone up and down, and we suspect that's just related to news and commodity prices and the like. So it's been, we think, somewhat range bound, but we think it could be poised to break out of this range sometime soon. Overall, the financial statement quality of Marathon is excellent. The company has, let's see, $2 billion in debt over the next 5 years, and that's against revenues of about $1.5 billion, and that's pretty manageable for them. As we noted already, their operating margin trend is flat. The price pattern trend also is flat, and overall for the market, we feel that the market still has some bearish tendencies. We're seeing some pullbacks in different names, as well as we're continuing to see some smaller stocks that seem rich to continue to advance. So definitely seeing some conflicting signals that doesn't paint a uniform story and direction, that's for sure. So the recent closing price for Marathon Oil is at $35.38, and its 12-month price target we see at $46.37. So over the next year, we could see that Marathon Oil could appreciate about 31.1%. Marathon has been continuing to make decent earnings over the past year, and it seems as though that the stock hasn't moved up based on those earnings. So we just think that the pressure is going to continue to build for the shares to increase, and earnings are projected to increase quite a bit. Marathon has issued a share buyback program, and they're selling some of their assets in the United Kingdom and Norway, and the sale of those assets are expected to pay for the share buyback, so there's no weakness in the company that way. And overall, with the increasing fracking activity in North America, the company's prospects look good. So, we feel like this company has maybe been a bit overlooked as of late. Let's see, Marathon they have quite a bit of reserves. They have $2 billion barrels of oil equivalent reserves. 30% of those reserves are in Africa, 33% of those reserves are in Canada, and 32% of those reserves are in the United States, and 5% are in Europe. Additionally, they have the asset management company BlackRock owns 9.5% of them, which is a pretty good sign. And let's see. And I think we've covered some of the salient points for Marathon. We feel like this is the best energy stock to buy right now, and we feel good about its 12-month upside potential of 31.1%. So take a closer look at it. Consider adding it to your portfolio. And on to our last slide. This is just a reminder to sign up for our newsletter by going to www.gmcstockpicks.com, and you can be among the first to hear about great investment opportunities like this one. And we found this Marathon Oil opportunity like our others by using our proprietary algorithms, and we review, rank, and analyze over 3,500 stocks every week. We rank them based on those that have the greatest potential to go up, as well as those that have the greatest potential to go down. So we feel pretty good with our approach and the results we're seeing so far. So please check us out and let other people know about us. And we hope this presentation has been helpful. That's all we have for now, and talk to you next week. Take care.